What is happening, traders and investors? It's Rod with Power Group. Welcome back on the pursuit of wealth, your home for MJ stocks, crypto assets, and interviews. Today's Thursday, May 18th. Hope you're well. And in this video, going to be diving into the SPY ETF chart. We're going to talk about some targets. Could it be targeting $439? I'm going to do some technical analysis. I'll give my thoughts and opinions on the chart and what to expect in the days, weeks, months ahead. Before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe. Tick the bell, you'll be notified on any future videos or when I go live. Getting close to the 500,000 views mark, so I want to just show my appreciation and gratitude for the community. That is no easy feat, and like I said, I've been really pushing the channel over the last couple of years. Started it in 2018, but really been kicking it into high gear in summer of 2020, so it's been almost 3 years actually. Hard to believe how fast time goes by, especially after C19. But jumping into the charts here in just a second, I want to just reiterate the fact that I did a video on the dollar index, the most important chart to watch, which we'll look at here in just a moment. But we'll look at the SPY chart here first and foremost. But before we do get to that, real quick, Ray Dalio says debt ceiling debate sets stage for disastrous financial collapse. So, well, most people think that the stock market's going to collapse. It's usually the opposite, right? So we usually see people on one side of the fence, and right now everybody's thinking because of the debt ceiling that we're going to collapse. But generally, when the masses think a certain way, we usually have the opposite effect, right? So you want to be that contrarian investor or trader. Not always. I mean, there's certain things that can come true. Obviously, if Ray Dalio is a very sought after investor, knows a lot about, he knows what he's talking about. So definitely take what he says with a grain of salt though, because this is news for the masses, not necessarily news for the classes. Do I think that the stock market is going to collapse? Absolutely. I actually did a video on that exact subject. So if you scroll down here, it's how I'm preparing for one of the biggest market crashes in history. I think this is going to be not only a recession, but a depression. It's going to be a 1929 Great Depression style collapse. And in my opinion, we could see the biggest stock market crash in history. But I do believe that we're going to be set for a bullish end to 2023, maybe even a spillage into 2024. And another reason for that is because we recently found out, and there's been talks about this for a while now, but there's now bipartisan group, including Gates and Ocasio-Cortez, I think that's how you pronounce it. They unveiled a bill to ban lawmakers from owning stocks. And this is something I've been saying for a while now, that we're probably going to see more upside on stocks until this occurs, right? Because if we take a look at the S&P 500, if we go to the monthly time frame, guess where the Federal Reserve employees banned themselves from owning stocks? Right here. They didn't do it down here. They didn't do it down here. They did it at the top, right? So where do you think Congress is going to want to ban themselves from owning stocks, right? Are they going to want to crash the market and do it down here or down here? Of course not, right? They're going to be looking like the heroes. Oh, we don't want to sell. We're, expecting the stock market to go up. The U.S. economy is very strong. We don't want to sell, but we have to because of this new bill, right? And they're probably going to say, just like in the dot-com days, everything's just going to continue higher, right? And there's no need to panic. We're only selling because we have to because of this new bill. Then they'll look like heroes, right? But this just goes to show how manipulated and corrupt our industry and or the financial markets really are. Because, think about it. How are this is ludicrous. A monkey could figure this out, right? Anybody with half a brain, even a quarter of a brain, would realize that it's a terrible idea for people who work in lawmaking to be able to own stocks. How is that legal? That is borderline insider trading to the highest level. And, like I said, just give your head a shake. This should never have been allowed in the first place. And again, this is probably going to be a top indicator. If you're wondering where we're going to top out, I'll give you my targets and what to expect here in terms of technical analysis and whatnot here in a moment. But if you're wondering when we're going to top out and when's a good idea to start taking profits on the S&P 500 and expecting a multi-year bear market or, some sustained downside, some very big selling pressure to the downside, it's probably going to be when this bill gets passed. And there's a lot of speculation that this could get passed sometime between the end of the year, so sometime in between September and December. I think it's October more likely is a realistic time frame that we can expect. But that's going to be a potential top indicator. And just because they pass that bill and they ban them from owning stocks doesn't mean it's going to collapse right that second. It might take a few weeks, few months, but that is definitely going to be a signal for me that I'll be watching for to potentially start to exit some of my positions, especially on the S&P 500. But let's take a look at the chart here. So on the time frame, hourly time frame, I did mention in the POW Group private community of private paid members yesterday that we were looking at an hourly bull flag. So we had the low, high, higher low, we were scouting here, and anything over that 0.32 fib there at 413.70 was a potential for an hourly bull flag. And then in order to confirm the hourly bull flag, we needed to break resistance at 415.86. Then today, we broke on this candle right here, we broke that 415 resistance and confirmed the hourly bull flag. If you take the measured move, you just take the trend line, you move it from the low to the high, then you move it out to get the measured move, you move it out to the 0.32 fib, and look, that is textbook to the exact measured move, basically. So people say that technical analysis is a self-fulfilling prophecy. Well, you know, I could care less if this hit or not, right? I didn't even have a position on the S&P 500 long. I was just looking at my other positions that I'm looking at, right? Some other individual stocks like MJ and cryptos and things like that, right? Like if the S&P 500 is going to go up and it's a risk asset, then other risk assets are probably going to go up as well, right? So this is textbook. Goes to show you how perfect technical analysis can be. Not always, right? It's not always going to be correct. It's just knowing what is the most likely scenario. And look at that volume coming in there at the end of the day as well. But that was textbook bull flag on the hourly time frame coming through and playing out, like I said, to perfection. And again, if you like technical analysis is just odds and probabilities and what might happen, right? Doesn't mean it's guaranteed, but at least you have an edge, right? And speaking of bull flags, we actually have a weekly bull flag as well. So we have the low, high, we're scouting a higher low on the weekly. Anything over that 0.32 fib there at 401, get the bar in the way there, 401.64. So as long as 401.64 held, we were looking at a weekly bull flag. And then we needed to break 417.62 to see further continuation. Guess what? We hit 419.67. Therefore, we're through that resistance. And now we're targeting, again, we just take the measured move. You take this low to the high, you move it over here, and then you get your measured move. So we're targeting 439 on the S&P 500 here on the weekly time frame. Does it mean we're going to get there next week or the week after that? No, it could be 4 weeks, could be 5 weeks, could be 3 months from now. We'll just have to wait and see. There's no timeline on this. It's just saying that generally we're probably going to trend there sooner than not, especially, you know, if it's on a longer term time frame, if it's on the monthly time frame, it could take longer. If it's on the hourly, well, it might only take a couple of days, just like it happened today. If you're looking at an hourly bull flag, it happened the next day, right? And then on the weekly time frame, if we're looking at a weekly bull flag and it's a 439 target, well, it might take multiple weeks, right? Could be next week, could be multiple weeks, right? So you're looking at longer time frames equals longer time to play out, right? Shorter time frames, shorter time to play out. So we're looking at 439 as the next target, and then we had that monthly inverse head and shoulders that we were looking at here as well, and it didn't really give us that right shoulder to down to the exact number. So around 358, 360 was the potential right shoulder. But we did see a little brief consolidation here, and we're now confirming a monthly uptrend with the low, high, higher low, and higher high. All systems right now are looking like we could see potential for 439, maybe even testing all-time highs into the end of the year here. And if we take a look at the Thiscom Fractal, I'm not going to go into this, but it's eerily similar. We peaked in the RSI in 1996, and then the price peaked 4 years later. Then we went to monthly oversold, and it was about 900 and some odd days of bear market. Same thing here. RSI peaked in 2018. The price peaked 4 years later in 2021 into 2022. So about 4 years later. And I took that Thiscom Fractal from this bust and overlaid it here. And then if we just take a look from the peak out for about 900 days, you're looking at a potential bottom somewhere around September of 2024, right? So one thing I want to reiterate here is we can't always say that the past is going to repeat. It can rhyme though, and it can be similar. And I expected, we were following this Thiscom Fractal in this bust here, boom and bust, perfectly. And then I expected us to deviate from it. And the reason why I expected that is because of how manipulated the market is, right? We have congressmen and women owning stocks. Like, it's still, lawmakers are still allowed to own stocks. If that doesn't show you right there that the market is manipulated and corrupt, nothing else will. But there's also the quantitative easing, and people are, the Fed, for example, are injecting liquidity into the market. So they printed trillions and trillions of dollars and put it into stocks and into the stock market. And that's propping up the market artificially, right? We didn't have that in the dot-com days. So I expected us to deviate from this fractal, at least in the short term, and then ultimately continue on and catch up to it. But I expected we were going to deviate from it because of this exactly, because Congress still hadn't been banned from owning stocks yet. So again, once that bill passes and that happens, which I think is a very probable outcome of happening, then that can potentially mark the top, right? So we'll be looking at that as a potential top indicator, and then we'll resume this downtrend and follow the Thiscom Fractal. And just like in the .com days, we dropped from the peak to the low, we dropped about 50%. So if we can expect something similar, 50% from the top to the low here would be the exact same, right? And that would put us somewhere around the 230s. But I argue that it could be even more than that. I think we could get down to around the 200s, maybe even a flush thereof, because of the fact that we're so manipulated and we're so much higher than we were in the previous bull run, right? So I think that it's going to be a bigger sell-off this time around, and we're going to potentially head to monthly oversold somewhere around, into spring 2024 and then into September 2024. I think that's when we could start to turn the ship around, but it's probably going to be, if we set a new all-time high this year into the end of the year here, or at least test all-time highs, it could be another 10 years before, a couple years before we bottom out, maybe, 2 or 3 years before we completely bottom out. Could be shorter than that, but I'd be looking at around, an average of about 2 years to bottom out. And then it could take us, 5 to 10 years potentially from there to set a new all-time high, right? So this could be the lost decade, they say, experts are calling for, is that this could be the last decade. This could be the last time we go to all-time highs, then a major, 50% plus correction, and then it could be another 5 to 10 years from there before we hit new all-time highs. So that's why they're calling it the lost decade, right? So again, I do expect us to deviate from that. But like I said, that weekly bull flag is what we're looking at here at the moment, targeting 439 on the weekly time frame. And we are confirming that. And right today, we closed right at the high of the day, so it's looking good. And we're even up after hours here. And the DXY is the most important chart. If you haven't seen that video, go check it out. The most important chart to watch, because of the fact that we're now bouncing on the monthly time frame on DXY, but anything under 105.88 is a potential lower high, so watch for us to top out somewhere around there. But it is a potential for a monthly downtrend and a monthly bear flag. So it's the opposite essentially as the S&P 500 is inversely correlated, right? So this will be extremely bullish for stocks and crypto if we see DXY lose 178. So 100.78, if that is lost, we'll get confirmation of the monthly downtrend and the monthly bear flag targeting about 93, which would give lots of runway and upside for stocks and crypto alike. So on the weekly time frame, SPY is looking really, really good here as well. We were set for a potential bear cross of the stochastic, but it is sort of stalled out, and we're starting to see it kind of just flatline here. The MACD is still bullish, and we're still well above the 10-week moving average there at 408 after back testing it as support, looking really good. That's what we want to see. We're also above all of the weekly moving averages here, so we have basically virtually no resistance here in terms of weekly moving averages, and we're even above all the daily moving averages as well. And we had a death cross here when the price, let me just reload this. So the price was at around 435 when the 50 was above the 200-day moving average. When they crossed like that, with the 50 above the 200, that's a death cross. Price was at around 433. Then we went to 344. 344. Now we're seeing the 50-day below the 200-day moving average and crossing. That's a golden cross. And look what happened the last time that happened. Price was at around 286 and it went to 470, right? Now we're seeing the golden cross again. This is a massive bullish indicator. And like I said, just adding more confluence to the fact that we could see tons of upside here. Maybe a test of all-time highs, maybe even a new all-time high, and then watch for Congress being banned from owning stocks to mark the top. But let me know what you think in the comments below. Always love hearing from you. Going to end it there. Thanks again for joining us in the Pursuit of Wealth. It's Rob with Powell Group. Thanks again, and we'll see you on the next video. Take care.